Hello traders, Peter with you once again for another weekly Wavematic forecast for 8th to 12th June 2020. And this week holds a very interesting trading opportunities, and I'm excited to be with you because let's get ready to tame the markets. I promised earlier in our Telegram channel that I'll be teaching on how I use divergences to profit from the markets. And before I do start with that lesson, if you're not subscribed to our YouTube channel, please do so now so that you don't miss other interesting tutorials and weekly forecasts we post along the week. So before we start, the last lesson I did was on triangles, and I had feedback that I moved very fast. I was moving very fast, and today I'll try to bridge in that gap, since I know that there are beginners with us and people who are also in the advanced stage wanting to master their craft well. So today I'll try and move very slowly so that I can explain it but without taking much time too, because I'll still move into analyzing the trading opportunities for this week. So what I'll do is today let's move to a blackboard and start from there. When we talk about divergence is trading patterns where relationships between price action and oscillator indicator is measured. We use divergence to measure the relationship between price action and an oscillator indicator. So it is used to identify price reversals. So what we mean by that is, you see, there are many oscillators that we can use to check divergences. It can be the MACD, it can be stochastics, it can be RSI. Any of these oscillators can use to check, but my favorite is the MACD. Then what divergence means is like the relationship between price action and the oscillator. Let's say price is moving upwards. We have an uptrend for price like this. And if the oscillator so we have an uptrend like this and price is moving upwards, there is a higher high, but with the oscillator there is a lower high on the indicator. This can be an RSI, it can be a MACD or a stochastic. So this is how divergences works. Price is moving higher, but on the oscillator you can see that price is declining. So what this means is, though price is moving higher, the buyers are losing their momentum. Buying pressure is going down. That is why the oscillator is lagging. And in order to check it very well, you see this is the top of the price here. As soon as price breaks through the top and creates a new high, we are expecting that the oscillator should also move higher. The oscillator should also move higher to make a new high. But as soon as the oscillator is not able to move higher and price starts lagging on the oscillator, then what it means that there is a potential reversal or a pullback. So this is what is likely to happen, because price is moving in a higher high and the oscillator is moving in a higher low. So there is getting to an end of a buying pressure, which can be the end of a correction or a complete reversal. It is not automatic that price will always have to decline as soon as there is a low in buying pressure, but we mix divergences with other ways of reanalyzing the markets to give us much confluence. At the same time, when price is moving in a higher high but the oscillator is also making higher highs, with that there is no divergence. So this is how it looks like. Price is moving in a higher high and the oscillator is also moving in a higher high. So that means there is no divergence. So it shows that there is more buying strength and there is more buying pressure, and price will keep on pushing higher. So with that, there is no divergence. But when price is moving in a higher high and the oscillator is moving in a lower, then there is a potential reversal or a pullback before continuation. So now let's look also at a bearish scenario. So on a bearish scenario, price is moving lower. There is a downtrend like this. but the oscillator is gaining momentum and moving higher. So when it happens like this, price is moving lower, but the oscillator is moving higher. So if you can see, there is clear indicating that the price is moving lower, but the oscillator is moving higher. It shows that the selling pressure is dying down. There are now more buyers getting involved. So there is a possibility of price reversing to the bullish side, and this is called the bullish divergence. On the same way, when price is moving lower, but if you check the oscillator, and the oscillator is also moving lower like this, then it means there is no divergence, because price is moving lower and the oscillator is also moving lower. So price is not coming together, it is not converging. So when it happens like that, there is no divergence. So what this means is there can be a pullback and price will still continue down. Why? Because there is still selling pressure. So let's go look at some live examples. Okay, if we look at, this is USD Japanese yen, we'll be using that and fast forward it to today's analysis. But even if we look at the previous analysis, so this is the peak of price, and at that time I'm using the MACD. Whenever price is going up, you see that I'm using only the histograms. I don't need the crossovers, so I'm only using the histogram. So with the histogram, whenever price is moving higher at the bullish end, it gives us a green color, and whenever price is moving down and it cross over, it gives us a red color. So what happens is, now this is the peak of this bullish ride, and this is the peak of the MACD. This is the peak of the MACD. So there was a correction, and now price made a higher high. But the MACD, price made a higher high. But you can see price made a higher high. But on the MACD, price made a higher low. So what is this indicating to us? That the buying pressure is dying down. So there is a potential of a pullback or a reversal before the trend. And what happens? Price kept consolidating, came down before the trend resumes. Okay, let's look at another example in Great Britain Japanese yen. You can see from this end that during the wave count of green wave 3, the MACD had peaked here. So there was a consolidation and price broke through green wave 3 to give us green wave 5. But you can see that the MACD was still making higher low. So what is that telling us? It is telling us that buyers are losing momentum, and there is a possibility of price reversing or giving us a pullback before the next trend resumes. So with that, let's zoom straight into this week's analysis, and this week I'm analyzing most pairs we can get divergences in, so that you understand with these examples. So we will start with USD Japanese yen in this week's analysis. In USD Japanese yen, I think I posted on June 3rd a forecast on this in our Telegram group. Yeah, on June 3rd, I posted in our Telegram group, one of our Facebook pages, an analysis of USD Japanese yen, and we were looking that price is going to move higher to complete blue wave 3 before we come down for blue wave 4, and finally we go for the blue wave 5. And fast forward to today, so this was on the lower time frame, on the 30 minutes time frame, and this is what happened. Price moved we were anticipating that the completion of red wave 4, then price moves higher to complete red wave 5 of blue wave 3. So if we look at what happened on that same 30 minutes time frame, price, when I posted it, we were here. When I posted it, we were around here, red wave 4. So price completed it, and now we've gotten a red wave 5 of blue wave 3, which was a very easy money for those who took that scalping move. And now we are looking forward for a reversal, for a pullback to complete blue wave 4 of red wave 4. And so what we are going to do is, now we also have an example of the divergence we just treated. So now we can see that price is moving, is giving us higher high. So from green wave 3 to, from red wave 3 to red wave 5, price is moving higher. But we can see that on the MACD, price is moving lower. So it's telling you that buying pressure is dying down. The buying pressure is dying down and more sellers are coming in. So there is a potential pullback, and we are not using the MACD alone. Now the MACD is being mixed with our wave analysis, which we are already anticipating for wave 4, blue wave 4, and the MACD is just there to complement and give us much confluence on what is likely to happen. So now the best way to trade this one, now we've seen that it's matching with our wave analysis. We have MACD. Let me add one additional confluence so that you can trade safely. Now what you can do is that you can add a trend line. So the trend line, this is how. So now we've had a trend line. So in order for us to have a very safe selling zone, you have to wait for price to break out from the trend line. It will give you a very small correction on the lower time frame. Then you have a sell to complete your blue wave 4 before price moves higher to complete blue wave 5. So now we've had 3 different confluences. 1, our wave count is on point. 2, we are having the MACD. We are having MACD, which is also showing that there is divergence. And now we have projected a trend line and waiting for price to break through the trend line. Look for a small correction, either a flat or anything, a flag on the lower time frame. Then we can join the sell. With that, you get more confluence before when wave 4 finishes. Then we will start looking for buy to complete green wave 5, to complete blue wave 5 of green wave 3. So the next pair that we'll be looking at is Great Britain Pound Japanese Yen. So on Great British Pound Japanese Yen, this is the daily time frame. We've seen that we've had an impulse down and price is giving us a sideways correction. So what is happening is, on the sideways correction, we've had an A, B, then we are anticipating a C to complete yellow wave C. So on the A, we had an ABC with C being an ending diagonal. Then on yellow wave B, we had a leading diagonal for purple wave A, an expanding flat for purple wave B. This even looks more of a running flat for purple wave B, then an impulse for wave C. And now we are anticipating that price will move and give us an impulse of 3, 4, 5 to complete yellow wave C, so that in all we can get a flat before the trend resumes to continue on down. So how do we trade this week? Let's look at the lower time frame. On the lower time frame, we are getting closer to, we are almost done with green wave 3. On the 2 hours time frame for Great Britain Pound Japanese Yen, we are through with purple wave 1 and purple wave 2, and now we are looking forward to completing purple wave 3. In purple wave 3, we've done wave 1, 2, 3. Wave 3, we have a nice 5 wave breakdown. Then now we are looking for a pullback to complete purple wave 4. green wave 4 before we move upwards to complete green wave 5 of purple wave 3. So what is happening is now there's also a form of divergence which we talked about. So now price is moving in higher high here. You can check blue wave 3, then blue wave 5, price is moving high. Though there is no crossover, this is what we call internal divergence. Price is moving high, but you can see that though there is no crossover to the downside of the MACD, but still you can see that price is not breaking the top. So these two, there is a possibility of a pullback before the trend continues. So now the same way we did with USD Japanese yen, we are going to do that same thing. Now we have our wave count, we have our MACD giving us much indication. So we can join with the trend line, wait for a breakout from the trend line, then join the sell for a very short term sell to complete green wave 4. Or if you are a long term trader, wait for the correction of green wave 4 to finish, then join the buy for green wave 5 of purple wave 3. The next pair we'll be looking at is Great British Pound Japanese yen. On Great British Pound, I think I posted on some time ago, I think May 20th. So May 20th, we posted an analysis on Great Britain Pound, and this on the daily time frame. We were anticipating a push higher to complete green wave 3 before we move upwards down. So on the lower time frame, we had an impulse up for green wave 1, then a correction to end green wave 2. So we forecasted that okay, the next impulsive wave for green wave 3 is starting, so we are anticipating a move upwards. And to today, this was where price was when we posted the update. It was making this correction. Then now that correction ended for green wave 2, and we cashed this very beautiful impulse for blue wave 3. Now we are in a very similar situation. So now what we are going to do is, now it looks like price is not done with the impulsive wave. If it is done, it can be an ending diagonal for red wave 5, or if it's going to be an impulse, price is going to move a little higher to complete red wave 5. Then price will give us either a zigzag, a triangle, or any fourth wave correction to complete blue wave 4. Then we go higher to complete blue wave 5. So how are we going to trade this? It's very easy. You have to wait to see prices. So the same way, this one you can use a trend line, connect blue wave 2, so with this one too, you can use a trend line, wait for price to break out of the trend line, either this way, then have a very short term scale, a scalping scale to complete red wave 4 before you go upwards to complete blue wave 5. So the next pair we'll be looking at is, let's look at the Euro USD. With Euro USD is moving very high, but we can see that the non-farm payroll that came in last week was very positive for the dollar. So there was a strength in dollar which we are anticipating is going to continue for this week. So we are still holding on to this analysis that though it looks more like a bullish trend, but we are anticipating that price is going to give us a big expanding flat before we will resume. So we are anticipating a 5-wave move down to complete green wave C of purple wave 2. And this, when you are planning of trading Euro USD this week, on Wednesday there is a lot of fundamental news that is going to affect Euro USD on Wednesday, so you have to keep mind of that. On Wednesday, there is a lot of news concerning USD in particular. The consumer price index CPI will be released, and FOMC will also be released. So if you are trading USD this week, you have to watch out on those news on Wednesday. So whenever you are in a trade before the news release, you have to find a way and manage the trade, or get out of the trade when you are in profit for the news to be released first. The dollar index, which is always it has a form of correlation with Euro USD, so that we will understand what is happening there very well. So with the dollar index too, as we discussed, I think we made an analysis of this last week, and I'm of the same analysis that we've had with green wave B. We have a triangle for wave B, then an impulse for wave C. Still, price is holding in the Fibonacci level of 1.618 or 161%, 161.8%, which we can get a very nice reversal when the US dollar strengthens to give us a 5-wave impulse upwards. So let's keep track of those things. Finally, let's look at Bitcoin and end today's Wavematic forecast. And before we even went, if you're not subscribed to our channel, do subscribe to our channel. And if you have any particular pair you want me to look into it and analyze it this week for you, don't forget to leave in the comment section below, so that I can have a look at it and give update on those particular pair this week. So on Bitcoin, on our bullish count, we have completed green wave 1 of purple wave 3. Then now we are looking forward for a pullback for green wave 2. It can be a 3-way pullback for green wave 2 before we complete we start moving upwards to complete green wave 3. And the same way on our alternate count, on the triangle, we are looking at price completing purple wave D, and we are anticipating a 3-wave move to complete purple wave E of yellow wave 4 before we move up. So you can see that on both our primary and alternate counts, price is indicating a 4 before we continue upwards. So whatever of the count that you are looking at on the short term now, this is what we are looking for. This is what we are looking for. We are looking for this 3-way pullback. So whichever of the count that you are looking at, either we are already in the 5th wave, yellow wave 5, or either we are now about to complete yellow wave 4 before we move upwards. Look and track this correction before we move up. So how are we going to trade this? On the lower time frame, whether you are using the primary count or the alternate count, the analysis is more of the same. So now on the lower time frame, we have wave 1, wave 2, wave 3, wave 4, and now we are anticipating a pullback to wave 5. So what you are going to do is we are looking for, and now it looks like we are even having a breakout. So if you are trading, if those who trade Bitcoin on the weekend, now you are getting a very nice sell setup. We have a trend line here. So now those who trade Bitcoin in the weekend, it's likely you get a sell setup today. But those of us who trade during the weekdays, we can also get a nice sell setup on Monday. So this is how I would trade this. So we are likely to get a nice 1:2:1 trade on this. Let's go for 1:2.5. 1:2.5 on this. Then we are likely to get this one. So once we complete for yellow wave 5 of red wave 1, then we are anticipating a pullback. So this is part of the bigger correction we are tracking on the daily. So this is just it's part of wave A of the bigger correction. So when you are using the triangle scenario, here is supposed to be wave D, where green wave 1 is supposed to be wave D, and now we are looking at the zigzag correction. So this is the 15-hour time frame. So as you come to the lower time frames, you are now able to count the waves, more wave counts there. So thank you very much for being with me this week, and do subscribe to our channel and leave your comments and whatever your thoughts are. If you have any particular pair that you want me to look into this week, leave it on the comment section below, and see you in the course of the week.